Hey traders, happy Sunday everybody. Welcome to our weekly Raghee report, taking a look at the macroeconomic trends, the bigger picture, daily, even sometimes weekly trends that we're dealing with in this market, as well as the calendar to come. And of course, your questions. So thanks for, as always, being here for our kickoff for the week. It's a new month. So we know that we're going to be dealing with some of the tendencies that we see as we roll from one month to the next. One of the tendencies that we will sometimes see is the way in which there will be, say, think about it this way. If you want to take distributions out on your investments, when do you do it? When do you pay yourself? Typically, you're going to pay yourself at the end of the month. And if the markets are moving higher and you're feeling rather optimistic about where the broader equities are going, well, then your tendency might be to reinvest. And when the context of a uptrend, where there's not even an uptrend, but where there's economic optimism, when we're optimistic about equities, that selling at the end of the month and then reinvesting at the beginning of the new month is about a 3-day, the last 3 days of the old month, the first 3 days of the new month phenomenon. That's not to say that's what happens every time, but there is a tendency for that. So that's something to keep in mind. I'll be keeping an eye on that. However, is there a broader optimism in the market? Well, we've had a rally, much of, I'd say, the last half of July. Equities were moving higher. You're taking a look at the S&P right here. Here's the NASDAQ. I think the most important thing to note about July, probably the most notable thing about July, is that from the downtrend that organized in the latter half of June, where a lot of pessimism was making its way into the market, will we or will we not see a more aggressive Federal Reserve? Will we or will we not go into recession? Which, by the way, recession was meaningless before. Now that we're redefining whatever the heck that it is, it's even more meaningless now. And if there is a reaction to recession, what is it going to be? Do we expect the Federal Reserve to continue to hike aggressively? Or will we perhaps think that the Federal Reserve might not be as aggressive as we thought they may when we measure what we believe they're going to do in the Fed Fund futures come June? I mean, we've seen now a much less a much less hawkish Federal Reserve by way of what they're saying and what we see their behavior mapping out to. Whether you look at the dot plots, whether you look at the Fed Fund futures graphs that I show you all, we can see that there is less likelihood for as many hikes, and we should be peaking. We should hit that target rate probability for the Federal Reserve come December of this year, and then we level off. That is the macro. Anything other than that is kind of underneath that larger narrative. In fact, jobs, inflation, growth, those all feed that bigger narrative of what is the Federal Reserve going to do. There's no macroeconomic pillar more important than monetary policy. And of course, inflation, jobs, and growth are the pillars that allow us to get a feel for what the Federal Reserve is seeing. And then that is going to map to their, of course, message and ultimately their policy. So it's kind of round and round in terms of the way that kind of macroeconomic analysis is going to feel. That's where we are. This week, we have non-farm payroll coming up. So, of course, remember, the Federal Reserve has what's known as a dual mandate. They have two responsibilities. One, of course, is to tame inflation. Great job there on the Federal Reserve. And the other is to make sure that the jobs picture is healthy. However, I will say, I mock the FOMC from time to time. Don't we all? They are dealing with a bubble of their own inflating. That's okay. We benefited from look, as much as we may dog the Fed right now, is anyone going to look at the returns from, say, the last 8 to 10 years and say they're upset? Well, we got to give the Fed credit for that too. Right? It can't just be one way. The idea now that we're going to hike until December, gang, on those Fed Fund futures, there's already a little bit of discussion that we could start to unravel some of those hikes as early as July. I know Why are we hiking then? So that we have something to cut. That's the way that it works. When we talk about non-farm payroll, that's going to be one of the pillars. That's going to be a major hot zone. That's going to be something we will watch. And if that jobs number is weak, is lower, is a quote unquote miss, that expectation for a more aggressive Fed comes down. If that jobs number is stronger than expected, if it's a good, strong number, then we'll probably favor the higher end of the target rate probability. And so this is where we are still in the bad news is good news for the equities type mentality. So non-farm payroll is the next big hot zone coming up. And of course, that's coming up, what is it, August 5? This coming Friday. Let's see. Yeah, what is it? August 5? There you go. August 5. All right. So let's go ahead and jump into the questions that we have, of course, as we do for all our shows. And let's kick it off with Pratkis, who asks, on Friday, VIX structure turned. Okay, so we're going to an intraday chart. Sure. Okay. So on Friday, the VIX went double red. Oh, on the daily. Okay, I see what you're saying. Went double red on the daily. Can we speak of the significance of this? It's a very fresh transition. It's not as if we've been in double red for days or even weeks. Is it weak? Of course. So why are we double red? The multi-trend on the bottom here measures the 8, 13, 21, 34. That's on a black box. Those two rows, the top row that goes between red, green, yellow, and that more steady lower row is measuring the momentum and the trend. And having gone then double red means the 8, 13, 21 are structured bearishly. We've just gone there. So would I consider this an established downtrend? No, but it does have my attention. And that's really it, practice. So I would say I'm a little bit more bearish than it would have been, say, before the lower row of the multi-trend went red, but we don't have an established psychology. This is difficult. That transition from yellow to red here on the lower row of the multi-trend, that's transitional. Transitional markets are notoriously difficult to trade because, frankly, the sentiment that's still most dominant is the one that was established for so very long, which was neutral. So yes, it's freshly bearish, but it's freshly bearish, right? We're just now waiting to see if we're going to get more traction to the downside. So let's wait for maybe 2 or 3 more sessions where the 8, 13, 21, and 34 are able to maintain that trajectory lower. And if they're not, we go right back to the way that we were, which is neutral. Transitional markets are a warning, right? So that's really more of a warning, more so than anything. And yes, for the VIX to have gone red is quite unusual. We haven't seen anything but a neutral VIX since April, as you can see back here, of 2021. So it is unusual, but it doesn't mean it's going to stay very long. In this case, this double red lasted for barely 3 weeks. Barely 3 weeks. So let's not get too ahead of ourselves, but great eye, definitely something to keep an eye on. It has our interest, not quite bearish attention yet. So thank you for the question. Hey there, Ronaldo. Good day, fellow learners. Smash the like. I do appreciate that. Look, it's moving the needle for you. If this is a way that, you can get together with your fellow traders, we can talk about this thing that we love, all of us, which are the markets, the mentality that we must develop to be market traders, all the research that we do. Yeah, absolutely. If this is moving the needle for you, I appreciate the time and definitely smash that like button. I do appreciate it. All right, next up, TLT. How are you, Mark? Okay, anytime we have an ETF that has a futures alternative, we want to start there. I would not say this is an uptrend yet. It's not even freshly double green. The trend that preceded the chop that we've been in for July was down. The trend before that was neutral. The trend before that was a more prolonged downtrend. There is still more bearishness than there is bullishness. And if anything, the most non-bearish thing we have is a neutral market. Remember, again, we don't want to look at the market the way I would sadly say 80% of market participants do, which is a very binary bullish or bearish. That's actually incomplete. We have bullish, bearish, and we have neutral. And that neutral can carry with it the sentiment that preceded the neutral environment. And so we could have bearish neutral and bullish neutral, but this is still neutral. I would call it bearish neutral. That said, we're still below the 200 exponential moving average. We're forming maybe a minor high, and the low of Friday's candle was 142.10. So I would like to see the ZB, that's the September contract of the long bond, break that 142 handle, definitely the 142.10, but break that 142 handle, and that should then carry TLT lower. Remember, TLT is not really the symbol we want to use when we're trying to understand what's next for the long bond. Why is that, Rog? Why is it that you're always taking us over to futures? Is it because you've been a futures trader for the longest time? Maybe, I used to wonder that too, but then think about it this way. This is the way I explain it to my group over at the Sector Secrets Mastery, and shout out to my Mastery members. The thing that I want to remember about the TLT is, when does it trade? And where's my handy dandy drawing tool? Here we go. 9:30 a.m. Eastern to 4, right? Those are the hours for the TLT. ZB, the long bond futures, trade for far more than that. Most futures contracts trade somewhere between 21 to 22 hours per day. They close for settlement. They take little breaks, but they're going to have far more trading hours, and they're going to reflect far more individual financial centers as opposed to the 9:30 to 4 U.S. Wall Street hours, trading hours. A more complete set of financial centers reflecting their opinion of the long bond is going to only be seen in ZB. And then TLT inherits whatever the ZB has been doing once the 9:30 bell opens. So I don't want to say the TLT is wrong. It's just not invited to the whole party, right? It's as if we show up at the movie an hour after it starts and we leave 45 minutes before it ends. We got a gist of what the movie is about, but we're missing a lot of it. That's what the ETFs that do have futures contracts really are. They're just incomplete. So always ZB, and that's my plan with TLT, Mark. That's the plan there. All right. Next up, Nick, how are you? I understand most traders only look for a handful of entry types. Nick, one of the things that I had done, and that's correct, and that's the best way to do it, frankly, just like a great batter at the plate has a handful of pitches that they know are their bread and butter, right? They know there's a handful of pitches. When they see it coming their way, they know this is mine. Now, are there other pitches? Sure. But remember, let me see if I can't find my favorite Ted Williams image here. Just bear with me. I'm going to open up my, my little images here. Where is it? I love this Ted Williams. This comes straight from Warren Buffett and Your Circle of Competence. I think I've shared that video a number of times. And do I not have Ted? Oh my gosh, I probably don't. Anyway, the whole idea is to have an idea. There he is. The whole idea is to know what your 3 or 4 pitches are. Ted Williams, one of the greatest batters of all time, had 3 pitches, really 3.5, if you will, that he knew were his bread and butter. He had another, as you can see here, 10 pitches that were almost as good. And then everything else fell from there. He knew, based upon where that ball was sailing over the plate, what his likely percentage of connecting was. All of us are the same way. If Ted was only really going to hit 3 balls, well, as a trader, hitting at a Ted Williams batting average level, I'm not going to have much more than that either, the way that I look at that. So yes, that's my logic. So for those of you that aren't familiar with what Nick is talking about, you're absolutely correct. This is the way that I look at that. So what specific trade entries, which chart patterns or candlestick type, cluster, etc., do I typically look for? So Nick, your question's a great one, and that is literally a 4-hour class. So you're asking me, how do I trade? I can appreciate that. That is far bigger a conversation that we can have. So let me give you at least something to work with. The first thing that I want to focus on is the environment. I was watching the Hungary GP. I don't know how many of you watch Formula One, and the weather was rolling in. And the weather changed race tactics, changed tire selection. Well, for traders, it's the same thing. I think the first thing we need to get to, instead of, where the rubber meets the road, which of course are the different entries, we need to know what the environment is. So I'm always going to try to prioritize, Nick, whether it be intraday or end of day, I'm going to prioritize trends. And then once I have a trend, I have the luxury of trading probably one or two of the easiest indicators that are ever on my chart. I've got the 34 EMA wave, the 34 EMA on the high, the close, the low, or I have a stair-stepping hourly price movement range zone, which I can combine with that intraday. That's an intraday tool specifically. So, really what we're talking about is what kind of market are we going to prioritize, and that's very much still going back to the Ted Williams, what are those 3 or 4 pitches? I'd say 2 of those pitches for me are clear directional bias. So whatever we need to do to be able to, whatever tools you have at your disposal, maybe you're using the ones that I share with you all, most of them are free. Prioritize the clarity of the underlying market identification first. Is it chopping? Is it moving lower? Is it moving higher? And then prioritize the trends. Then secondarily start to prioritize the chop. But Nick, I hope you can appreciate that is a massive question, and I couldn't possibly address that all here in our weekly report. But I appreciate you asking it. Thank you. Next up is, did I catch that race? MVC? I did. And I'll tell you what, talk about, I think there's some trading analogies here. If you all do not like racing, I can appreciate that. My father was a Formula One fan. His friends were Formula One fans. So this is kind of what I was raised on. I'm a little bit more of that fan. Watching Ferrari is a study in, I think this year, things that traders can learn from. Can you have a powerful indicator? Can you have a powerful car? Right now, for those of you that are not race car fans, you can at least understand, what if you as a driver have the best engine? They call them power plants, right? What if you have the best engine in all of F1? Best straightaway speed, best acceleration. You just have the fastest motor on the track. You think, fantastic, I'm going to win every race. It's like a trader thinking, I've got the holy grail of indicators. This thing is going to take me around the track that is known as the market. But then you have poor tactics. You have poor strategies. You have poor decisions being made while the race is going on. And that's exactly, sadly, what we're seeing from Ferrari. They have arguably 2 of the best drivers on the track. They have probably the best motor, right? Power of all the teams. And yet they are tactically so off. They are making some of the worst decisions that I can recollect. Such a strong mechanical, right, team. The engineers are doing their job, and the strategists, I don't know what's happening. Us as traders can do that. We can be handed a number of powerful indicators, but if we make poor decisions during race time, when the markets are open, it doesn't matter. And how many of you who are fans, especially for a Ferrari fan, it's got to be heartbreaking right now to watch a team literally give races away one after the other. And I think, again, there are a lot of interesting parallels to us as traders. Doesn't matter what's on your chart. If you make poor decisions, even if you have the best indicators out there, you can still lose. And today was a fantastic race. If you're a Red Bull fan, if you were a Merck fan, but it was really a lesson in how poor decisions can absolutely ruin a potential constructors championship and a potential driver championship that looked in the bag earlier this year. So yeah, I did MVC. It was a heck of a race because you got to see the drivers and the strategy get, play out in unison. And Red Bull, wow, I mean, what a great race. Okay, next up, Tim, what addition to my hourly price movement range and slow stow do you like to what addition to your hourly price movement range and slow stow charts do I like to add? I'm confused if it's the V profile, VWAP, V square signals. I have all three. So that's an intraday trading question. If you're going to add anything, you can add all three. I mean, they do work together. Everything that I have ever taught, any indicator that I've ever taught you all, since 2017, where I first introduced the TOPS indicator to the simpler community. Before that, I'd been sharing that with the trading community for about 20 years. Anything that I've taught you, it's simpler. All of them work together. Nothing supplants something else. I just have chosen in 2022, because I know a lot of traders got hurt at the last quarter or two in 2021. I said, you know what if I can come to the community with a layout of free tools that can be a foundation for everything they're going to do going forward. That's rooted in the primary function of any trader. Their first trading plan is, what's the underlying market environment? Can I give everyone a free version of my tools and then build upon that? Now, of course, Tim, that means I can't put V-score, V-profile, VWAPs, although VWAPs you can get on a lot of platforms as long as they're anchored. I can't put my premium tools on there. And so I started off with that TOPS foundation in 2022 as a way to hopefully help as many traders as I could. Do I put those others on there? Absolutely. I put all three. I always know where we are in relation to the VWAP based on the anchors that I taught. V-profile, it's going to work in unison with a slow stochastic. They're measuring two different things, but they're still giving me an idea of overbought and oversold. And finally, the V-profile is going to give me those value highs, value lows, points of control. And those are just really going to work in I think, unison with the Darvis, because it's another way of finding support and resistance. So all of those are going to work really well. Think of the VWAPs as maybe another tool that's going to work with the wave. Think of the V-score as a tool that's going to work with the slow stochastic. And think of the V-profile as something that's going to work with Darvis. And all three of them are going to bring a volume-based analysis to your charts. And that's the way that I look at it. All right. Hope that makes sense. All right. How am I going to play silver? Let's take a look. So silver, how to play silver after it's moved higher. I'm still bearish silver. It's nearing an overbought level on the slow stochastic. So how would I play it? I'd still be looking for a short. That's how I would play it, Raghee. I would focus on, well, take a look here. Darvis and Darvis. That's your zone. If we can get a coordinated move to that level, notice that all the levels are automated. Darvis and Darvis. They have proximity to where price is heading. Stretch those over. I like to get a little bit more geeky, as many of you know, and I'll color coordinate the levels, because if it's a purple level, that purplish, whatever color you want to call that, I know I'm extending a purple box level forward, and I'll make this one yellow. I know I'm extending so nothing here is done subjectively. Everything is done through the automation and the unbiased view of the automated Darvis 2.0, which, by the way, is a absolutely free tool. We're going into a neutral market. Yellow momentum, yellow trend, yellow momentum, yellow trend. And that means that the slow stochastic is now in play. The more traction we get, this is a very fresh transition. The more traction we get, and I'm going to favor the short side because that was clearly the dominant psychology that preceded this move into a non-trending environment. I'm going to look for an overbought slow stochastic. And usually I recommend my silver traders who are not experienced silver traders focus on options on either SI or the SLV. All right. SI or the SLV. And that's the way I'm going to look at silver, Raghee. That's it. Hey there, Elaine. How are you? I so love our Sector Secrets mastermind. Yes, that is my mastermind. If you're looking for how I day trade, how I swing trade, and how I structure my portfolio, how I am looking for opportunities to add to my longer term position trades, that is where we do it all. I appreciate that, Elaine, and thanks for being a part of our mastermind. I do appreciate that. Is there any significance to the weekly opening price? How do I use this information? The weekly is also the daily Sunday's opening price. I don't other than I like to know, Rocky, I like to know just generally, are we, so here's that first weekly little, that tiny little candle right there. All I want to know, is it above or below the halfway mark? So I'll look at the previous week's candle, cut it in half. Are we above it or below it? That's about the only, I just want to know where we are in terms of that halfway mark. It does tend to give me a little bit of an understanding of bullish and bearish sentiment, but that's about it. I'm not going to let that override a trend on the weekly. And for example, the weekly trend in silver is down. So I'm going to do the same trend analysis. Gang, one time frame doesn't get a pass on that whole, what is your market structure? What is the environment? So I noticed that for example, Rocky, the weekly chart of silver is double red. So, and I appreciate that. I try to be consistent. If for nothing else, I'm really not smart enough not to be consistent. The consistency helps me make decisions in a way that I know if I use something that I have tested has worked well in multiple seasons of the market, I just take it to scale, play out the probabilities, and let the chips fall where they may. And usually there's more chips in front of me than the market. And that's just the way that I look at it. I appreciate that. All right, next up is, let's see, gut feel, is the bottom in? So I totally appreciate the question. I never trade by my gut. Doesn't matter what my lower intestine has to say about the market. I never, ever trade by my gut. However, let's take the second part of your question. And is the bottom in? If by that we mean we are very unlikely to reorganize into a downtrend, yes, I'm not hedging. In fact, for those of you that are wondering, Rog, everyone kind of hedges. This might happen and that might happen. I'm not going to hedge. Watch any of the videos that I shared with you all in July. In fact, STK, I posted, I'm trying to think if it was July 7. On July 7, the free video, it would have been a Thursday maybe. Check out the videos back at the Simpler Trading YouTube channel. On July 7, I posted all the reasons macroeconomically why, yes, this current chop on the daily time frame is likely reflective of the macroeconomic winds shifting, where the Federal Reserve is very much on the latter. They're down the home stretch of the rate hikes. We, as market participants, you and I, we've got a really clear idea of where they're taking rates. There's no more surprises, at least for now. And if anything, the expectations for fewer hikes is clearly in play. That's why stocks are quite happy. And then we ask ourselves, well, why would the markets head back down again? Why? Because of a recession? We got our second negative GDP in a row last week. What did the markets do that day? They rallied. I am going to look at the macro data, look at that rate of change, look at the current choppy market, and yes, based on the macro trends and based on the trends and the broader averages and the most important sectors, if by meaning the bottom is in, that we're not going to reorganize into a downtrend, that's what that really means, by the way, gang. It doesn't mean that we're never going to move lower again. See, I always hesitate to say the bottom is in, because what happens, like a game of telephone, that those words leave my mouth and they go into everyone's ears as if it's okay to buy. Not necessarily true. What that means is we could chop around for the next 2 or 3 months. We don't have to move into an uptrend, right? Just because we've broken a downtrend doesn't mean the uptrend is inevitable. It simply means we've broken the downtrend. Now we have to wait for a setup to allow ourselves to control risk and take advantage of the upside. I would love a sell-off. Sell-off is not a downtrend. A sell-off in the context of chop is a market potentially moving from, let's look at the NASDAQ, for example, market moving from overbought to oversold. The closer we get to oversold, the more likely it is that I can find a good level that is oversold to position myself for a buy. That's what that means. So is the bottom in? Again, I will specifically define that is, no, I do not look at any of the data mapping to a reorganization of the downtrend. I see us now in chop. And in that regard, yes, the way that I'm viewing this market now, the bottom is in. But check out any of the free videos that I did in July. We've been talking about this exact topic since the 7th, right? So now everyone's going to go back and give you the analysis after July is complete and say, that was a great month. Well, no kidding. Thanks for the news flash, right? What our job is to look at the data and let the data tell us this is the path of least resistance. And on the 7th of July, the path of least resistance based on the data was up, but not an uptrend yet. So I appreciate the question. And I hope that helps clarify, kind of my take on, well, what I've been telling you all, I think is really important right now, which is watch the Federal Reserve. Recession does not matter. Earnings do not matter. I know, heresy. I know, call me a trading heretic. I am. I'll own that. Watch what the Federal Reserve is doing. They're the reason we were moving up. They're the reason, arguably, that we're moving back down. They will once again be the reason we are moving back up. Keep an eye on that. Keep an eye on the free videos if you're not a member. If you are a member, well, you've known this for a couple of months. We're waiting for our entry long. In the meanwhile, we've been day trading a lot. Why? Because it's not an easy buy right now, gang, and it's not an easy short on the daily time frame. But many of you that have been day trading with us in the Sector Secrets Mastery, and yes, every morning we get together and we day trade my favorite window of the day trading morning, which is 9:20. I'm trying to find my schedule here. I have a nice little graphic of our schedule. 9:20 to 10:35 every morning. So we day trade my favorite 70 minutes of the morning. And then we focus on, what we're going to swing trade. We focus on our longer term. Right now, longer term makes sense and day trading makes a lot of sense. And ultimately what we want to remember is if we can manage to be patient on those daily time frames and just stay nimble in the meanwhile. I think Lorna Bott and I were talking with the Sector Secrets Mastery folks, and I was telling her that my win rate through our day trading of the last 3 weeks was about 68 or 67%. And she said, mine's 72. So it's even better, right? So we're looking at a really good win rate on the day trades, which mean every day we look at the markets with a fresh set of eyes. We're not needing day after day after day of follow through, which in a non-trending market can be very, very tricky. So that's the way that we've been dealing with summer and this transitional market, shorter term timeframes or really longer term weekly timeframes. And come maybe mid-August going into the fall trading season, we should see some organization as the volume comes back into the market, right? We're still in summertime volume. As the volume comes back into the market, the participation, so too, hopefully we'll continue to watch. The trends will come as well. All right, gang, as always, thank you so much for joining me for our weekly show. I appreciate all the questions. I appreciate everyone coming out, spending 30 minutes with our crew tomorrow morning. 9 o'clock, right back here at the Simpler Trading YouTube channel. We have Charts and Coffee, our morning pregame show. We've been doing that for over a year and a half now. Come rain, come shine. I'll see you all tomorrow, 9 a.m. Eastern. Be good to each other, gang.